my 5 top stocks for July. I think it's about the time to share with you my 5 ideas for stock investments for month of July. Hello everyone and welcome back to Lifestyle Tips by Antoaneta and my series Investing with Antoaneta. I'm giving you my monthly top stocks list in today's video, but this time with a twist. Let me know in the comments down below or on social media if that's more of your thing. If you prefer this video style and if there is enough interest, I will adjust the schedule accordingly. Before we begin, I just want to give you all a quick reminder to hit this like button if you enjoy my content and subscribe to the channel not to miss any future updates. Anyway, here are the stocks that we are going to talk about today. Canadian Solar, PayPal, Shopify, FSLY, and SolarWinds. And as usual, if you stick around until the end, I've also got a bonus idea prepared for you. So let's dive right in and let's start with Canadian Solar. Current price 43.08, market cap 2.500 billions, P ratio 44.60, EPS 0.97. Alright, Canadian Solar. I talked about Canadian Solar stocks a couple of times on this channel already, and it turned out that many of you were pretty interested in the company. And yes, they did have a few hiccups recently, but as we can see, it's nothing major. They are already on their way back up, and I see nothing to worry about here. But as always say, I'm a long-term investor. When I look at the company, all I really care about is the future potential. That is why I don't mind if they underperform price-wise in the short term. Actually, I prefer it like that. If the price drops, it means I can grab even more shares for cheap. And yes, I've talked about all of this before. I just feel like I should mention it here because I've seen a ton of questions from people who got into Canadian Solar because they also saw the potential. But then the price dipped and everyone got worried. Suddenly, all of the positive went out of the window and people started questioning their decision. I'm talking about this dip right here, yeah? And everyone got worried. And if this was all that we had on the company, things would be looking pretty shaky. But we don't. I mean, we just had a look at the long-term charts. And you can see a small dip is not the end of the world. It's just part of how the stock market really works. There are very, very few businesses that can always go up. And even with them, there are the occasional dips, which are of course the best time to buy and build your position as a long-term investor. Why do I still believe in the company? Which is really important and I'd like to share with you. But again, please don't forget, I'm not a financial investor and you need to do your own research and you need to take your own decisions on choosing any companies to invest. But this is my opinion because their future prospects haven't changed. They've still got a ton of deals lined up. They are still working on big projects and I still believe in the management, which is vital. For example, just last week, Canadian Solar managed to secure 3 massive projects in Japan, securing their #1 market share position in the country. Their latest reports were also pretty solid. Revenues exceeded expectations, top line increased by over 31% year over year, and model shipments increased 42%. Now, this dip comes at a cost, but it makes perfect sense in this case. Total operating expenses were up 377% year over year, and gross margin went down 17.9% compared to the year-ago quarter. So in short, I see absolutely nothing to worry about here. I will continue building my Canadian solar position, and I plan to hold on to my shares for as long as possible. Let's move to my second company. Shopify, one of my favorite companies, and I really want to build a really good positions because, silly me, a few years ago when it was only $100 per share, I bought 10 or 20 and I sold them when they reached to 300. I didn't even think to leave a little bit. I just got good profit and I just sold them. But now, when it was around 800 and 900, I start building again back my positions. Unfortunately, people learn from their mistakes, and me as well. So there are quite few companies that I regret selling them a few years ago, and now I start building my positions again. And this is Shopify. Current price is 1.464, market cap 181.912 billions, EPS 12.79, P ratio 140.54. Yep, you say Shopify again. I know that I talk about Shopify a lot, but I've got excellent reasons for that. First of all, they've got absolutely massive potential. Digital shopping is the future. There are no real arguments against that. It is just way too practical and convenient. You can shop from anywhere at any time. No need to wait in lines, worry about what the store could have in stock or anything like that. And then you've also got the convenience of learning about the products. The internet has all of the information that you could ever ask for. Want to read reviews about the product, want to hear about people's experience with it, compare it with the competition, and it's all just a few clicks away. And that is just the tip of the iceberg, really. Yes, currently e-commerce accounts for about 20% of the entire industry, so there's incredible room for growth. And with their impressive numbers and great track record, Shopify gives us plenty of reasons to expect them to lead the pack. The lockdown also inspired a lot of people to start their own small businesses. And what is the easiest way to sell products on your own website? Yep, that is very right, Shopify integration. My websites also use Shopify, and I'm very happy with how it works. And no, I'm not affiliated with their company in any way. I just like their businesses, and I hold some Shopify shares on the stock market. But actually, using their service makes me appreciate the value here even more. The management is another solid point to consider Shopify. I've already brought this up a couple of times in the past, and I definitely feel like it deserves mention here. CEO and founder Tobias Lütke, who has a 92% approval rating on Glassdoor, by the way, owns nearly 10% of the common shares outstanding, which more or less guarantees that he is 100% financially aligned with shareholder interest. I'm 100% on board with Shopify, and I'm actively looking for good opportunities to add more Shopify stock to my portfolio. And now it's time to move to my third company, PayPal Holdings. Current price $290.24. Market cap 341 billions, PE ratio 66, EPS 4.39. And while we are on the subjects of digital transactions, we just have to mention PayPal. The continually growing online payment processor is one of the biggest players in the field, and even scored to 204th position on the Fortune 500 list in 219. How do they do it? Simple. They deliver results, excellent results. Since filing its prospectus in 2001, they've gone from a total payment volume of 1.3 billion all the way to 936 billion in 2021. And of course, PayPal was one of the companies that massively benefited from the lockdown imposed shopping trends, with their stock price hitting an all-time high of $298 per share in early February this year. As long-time believer in PayPal, I'm actively looking for opportunities to add more shares to my position, and I think it's the right moment again now. Two other stocks that caught my eye. So for this month, I've got something very, very different for you, and I bet you'll like it because they're quite cheap stocks. Instead of a top 5 stocks, I'm bringing you a couple of suggestions that I'm currently researching and they're new to my list. I often post ideas like this in the group, and I want to see if you guys would be interested in this sort of content as well. Or you could always treat it a sneak peek of some of the extra content that you've got access to by following the link in the description. Either way, here are 2 of the stocks that I've been following lately: FSLY and SolarWinds. And let's talk about FSLY. Current price $56.47, market cap $6 billion, EPS minus 1.24, and P ratio is none at the moment on Yahoo Finance. This is a cloud computing provider based in the States. They are a well-established company with over 10 years in the field, and their CDN content delivery network service is used by a ton of big names out there like Twitter, Reddit, Udemy, Slack, the New York Times, and more. CNG is that neat little thing that provides big websites with additional security against cyber attacks, and DDoS attacks, allows for better image optimization, and amplifies marketing tracking practices. Basically, it is thing that all big websites have to use if they want to remain relevant. This translates to a massive room for growth, and thanks to their already solid customer base, excellent potential for returns in the future. I've been keeping an eye on FSLY for a while, and the recent dips really made me consider building my positions now. And moving to my last choice for this month, SolarWinds, but don't forget to stick with me till then because I've got bonus idea for you after that. Current price $17.23, market cap $5.44 billion, P ratio 36, EPS 0.48. SolarWinds is a B2B IT infrastructure and network management service provider based in Texas. They've got a pretty decent track record, backed up by over 20 years in the field, 22 to be exact. Recently, one of their products became the target of the largest and the most sophisticated cyber attack that the world has ever seen, according to Microsoft President Brad Smith, which did tank the stock price pretty significantly. Went from 23.55 to on December 11 all the way down to $14 by December 18 last year. They spent the last couple of months recovering, and now they are sitting at 17.23 per share. I personally believe that SolarWinds can definitely come back in a full force in the future, but it's definitely not going to happen overnight. Then again, I only buy long term, so that is not really an issue for me. I'll be keeping a close eye on SolarWinds, and I'll probably end up adding some shares as soon as I see a good opportunities. And now I'd like to say thank you for being with me, and this is my bonus for you. Bonus stock for July. Kahoot. Yes, this is Kahoot. Current price $6.65, market cap $3.143 billion. There's no PE ratio at the moment here shown on Yahoo Finance, and EPS as well. So Kahoot, what is Kahoot? It is an innovative learning platform that uses games to supplement teaching practices for children. Keep in mind that the company isn't exactly new. They've been around for over 8 years now, and I'm sure that at least some of you have heard the name at least a couple of times by now. They've got over 5 billion cumulative players and reported an average of over 250 million games played for last year alone. The key factor here is pretty simple: accessibility. The platform allows everyone to jump right in and create their own educational game in minutes. There is no technical knowledge requirement and very few limitations. Since the games are hosted digitally, the platform offers excellent flexibility and allows players to engage with the learning process from anywhere globally. On the financial side, Kahoot has managed to maintain a solid growth profile and a positive cash flow over the last 5 quarters. During their presentations in March this year, the company had over 24 million active accounts for the past 12 months and over 550,000 paid subscriptions for professionals and teachers, up 200% from last year. Invoice revenues also grew substantially, reaching over $45 million, up 247% from last year. This stock shows a ton of promise, not just because of the numbers, but also because of their approach to education. It is fun, accessible, and flexible. Kids respond very well to gamified learning. The lockdowns help showcase some of the many benefits of digital education. Now, please don't get me wrong here. I'm not saying that Kahoot it will replace schools or anything, but all of these factors are definitely very beneficial, and they helped people recognize the real value of the platform. It was a big event before the global health situation, and I have no doubts that we will continue growing in the future. And that is about all I've got for you today, my friends. I know that we've talked about most of these companies, the first 3 before, but that is actually a big part of a long-term investing, picking out good businesses and following them closely. I don't know about you, but personally, I prefer to keep an eye on over 25-30 outstanding companies with solid track records instead of worrying about the latest overhyped, high-risk opportunities. It is just really not my style. Oh, and if you like the different style, you can always let me know by dropping me a line in the comments below. Of course, we've also got a ton of exclusive content on my websites, courses, ebooks, so you can find a lot of information. And this is all from me. So, thank you all for watching, and until next time, stay very, very motivated.